Grow your practice, grow your wealth, grow your impact. Find out how to spend less time in the dental chair and more time on the things you love.
Welcome back to the Dental Wealth Podcast. Matthew, I was talking to somebody last week who told me, they said, I listened to all your podcasts, and I got to tell you, the ones with Matthew are so much better. So
I like it.
Sir, thank you for bringing so much, life to the show.
Bring the handsomeness to the show.
So there you go. That's awesome. They're better with Matthew. That was the feedback I got.
We've had quite a few different settings as well. Over the course of the year, I think I was looking back at the old podcast, and I was like, wow, this production value has come a long way. Thank you, Reese. Thank you.
The production value. Yeah, it was that. I mean, before this, people, Reese is moving lighting around and making us look all sharp and stuff.
Yep, making sure we have backup audio and things like that. There's been quite a few times that we've forget to press that button sometimes.
All right, let's jump in. What do we got today, sir?
So I want to talk about investing. I know there's a lot of craziness going on right now. Doge. We talked about a little bit on the last podcast,
Dogecoin.
So, in particular, I know.
Did you get you some Dogecoin?
I did. Jordan's been trying to get me on it. I actually have a couple friends that got in it when it was like really low, and now they're all excited about it. And it's just
too late. Too late.
I just couldn't get into it, and that also made me want to go look at like everything else in the market. And I've been on like this kind of like tear, I guess, of just looking at too much market watch. So. And I know a lot of our clients kind of go through the same thing, and they're probably feeling a little bit, similar to what I am. Dogecoin, I missed out on it. I don't want to, which is going to cause them to probably buy a bunch of other stuff rather than investing in their practice. So I want you to touch on that, investments, what you should look for, or I know you always tell clients, even the best of our clients always invest in their practice first. So what does the market look like? What are some of the strategies you would suggest doctors take a look at?
Well, one thing I tell people, I was talking to a gentleman, where was he at last week? Virginia. And I told him, I don't know if he's listening to this or not, it was the first Zoom meeting I've had from a tractor. He was in a tractor. It was my first tractor Zoom meting. So
from Virginia?
I've had the back of a there's a lot of farming in Virginia, sir. I had a back of a pickup truck and Pacific Coast Highway. I've had that one before. Yep. So I don't know which one tops is the Pacific Coast Highway or the tractor, but I had a tractor.
I would say it's two different people too.
Yes, yeah, that's right.
Pacific Coast Highway, Virginia on the farm.
They're different people.
Two different people, but the important part is that you gave them both the same strategy, because you always say to anyone, it doesn't matter where you're at, doesn't matter what resources you have available, there's a way that you can benefit from learning this investment knowledge, how to invest in your practice, how to grow your practice, scalability. That's we work with clients all over the country, so we get that excuse all the time is you don't know my area, and you always say it, and I always like to touch on that is it doesn't matter what it is.
Nah, it doesn't matter. People just tell themselves it matters. And it's interesting because this person, well, what I was telling them, I said, look, I mean, there's a lot of people who can talk about management and operations, and I think we do an amazing job of that. But I said, I don't know anyone else who talks about capital investment and how to really truly invest in dental practice. I said, I still challenge the marketplace. I've been saying it for probably, I don't even know how many years now. Nobody else besides me that I know in the entire marketplace shows people how to invest capital in a dental practice. I'm challenging you now on this dental podcast right here, right now. Nobody else does this. But yet people still go back to the same silly advice. And in today's podcast, I'm going to talk about that, for instance, because I pulled up a chart.
Ooh, chart. Would be excited.
I am pulling a chart. That's right. This might be the first time in Dental Wealth Podcast history I am pulling a chart. And this is interesting. So this is what this is. It's average return on invested capital in U.S. industries. And so this is just so people understand why private equity is moving into this sector. So the average is 14.3% on invested capital. So 14.3% margin. And so we say, okay, well, that would be, right, that's a profitability number. So 14.3 from a profitability standpoint, you put money in, you get a 14.3% profit out. The 25th percentile being 10.9%, the 10th percentile being 7%. The 75th percentile being 18.6%, and get this, the 90th percentile being 25.3%. I want you to think about where a dental practice falls. Think about your own profit margin within a dental practice. Hallelujah, I've been saying it forever, is that, I mean, by the way, this
You're
is
automatically
by the way,
like 99th percentile.
by the way, this is Harvard. This is done by Harvard, just so anyone's like questioning the data. This is a Harvard University study, and we talk about, some of these industries that are high in margin are security brokers and dealers, soft drinks, packaged software, pharmaceuticals, perfume, cosmetic, advertising agencies, distilled spirits. I have heard for years that the distilled spirits is a that's 26.4%, by the way. If you want to start distilling spirits, there you go. And medical instruments for those who are creating the instruments are 21%. But I hang out here for a second. Mobile homes are at 15%, by the way. Wine and brandy is at 13.9. So here's what I want you to understand and take from this is that so let's talk about that. Why, by the way, when you talk about that type of a profit margin, you have to talk about barriers to entry. So I want to say that again. When you talk about that type of profit margin, there is a term that comes in mind, which is a strategic business term called barriers to entry. So let me explain what I mean by that. So when there are barriers to entry, so in dentistry, there are barriers to enter. Yep. The barrier to enter is a dental degree because you have to go to school and you have to put 4 years into dental school, and then if you're an oral surgeon, much more than that. And so then what ends up happening is you start to go, okay, well, there's a barrier entry. So since the barrier to entry is so high, you have to have an undergrad, then you have to go to dental school, and then you have to, right? So the barrier entry is so high, and then it costs a lot, right? Yeah. So to start a dental practice is not like $20, right? People are spending $300,000, $400,000 from a startup, per, de novo type. So okay, so that we have a huge barrier entry, very expensive. You have to be highly educated. So with a high barrier to entry, profit margin tends to be higher, right? Because there's less supply technically in the marketplace, and you can control that. And so, number one, I've been saying for years, like, invest in your dental practice. It's got, depending on your margins, 30, 40, 50% rate of return with a 1% risk rate. Yeah. I would think that
even if you look at all those other statistics that distillery, the cosmetic products, you look at those too. Those manufacturing facilities are open Monday through Sunday as well, when the ideal dental practice is probably open Monday to Thursday, and they're at a higher profit margin and work less.
Well, even in the spirit industry, one of the things people need to know is that there's barriers to entry. One of the things that happens is because there's distribution channels, and typically, for instance, if you're with I'm trying to think of a liquor, Jack Daniels or whatever. There's distributors, Budweiser. There's distributors. So what ends up happening is there's margin because only so many people can do. It's like a bunch of people are distributing Budweiser. And when I grew up in a town called Lakeland, Florida, and there's a guy named Bernie Little. Bernie Little owned the distributorship, and he would always race Miss Budweiser on the lake, and he'd fly his helicopter and his blimp over town, and he would put like a Ferrari in the Publix and wrap it around with like Budweiser stuff. Obviously, he did okay, right? Yeah. Why did he do okay? Well, because he was the only distributor of Budweiser. He was allowed to be the only distributor. I played golf with a guy one time who was the only Boar's Head distributor in the area. So they made it exclusive that you can only be so many. So there's barriers to that market. If customers are saying, I want Boar's Head, and you're the only person who can distribute that, then there's your margin. Well, dental offices also have had, even though there's a lot of dentists in the area, sometimes your margin's still significantly high. Yeah. And so there's a lot of margin on dentistry and has been for a long time, which is what I've argued. Why the hell is someone telling you to put money in a 401k and get 5%? You have, if the 90th percentile is basically 25%. Where does that put you, listening audience of Dental Wealth Podcast? What, in the 99th percentile? So you have one of the top Like literally investment of capital. If you looked at the entire United States of America, according to Harvard University, dental practices would be in like the top.
It's almost dumbfounding. I think the biggest statistic on top of that is, and I don't know if they mentioned in that chart or not, is the risk rate too. Like you always tell dentists, with a risk rate of what less than 1%.
That's right.
I guarantee you the risk rate on a cosmetic, a distillery, all those is way higher than just
way
1%.
Higher.
So
and they have economic changes. Yeah. The only way distillery doesn't have economic changes. People drinking a good time and a bad time, right?
It doesn't matter. It's like, yeah, we're good. So I would argue that it's in the 99th percentile of both of those things. Of risk rate and
I would completely agree.
So it makes no sense why you wouldn't.
But isn't it interesting that for years people have been telling people to pour money outside of this industry, and then even get this, sell it off. Hey, you should sell this thing off. I know that on invested capital. See, it's funny when I was reading this Harvard study that they did not say, they did not say how much cash left over. They said investment of capital. Yeah. These are economic terms, right? We use words like capital. They didn't say investment of money. I always tell people money is what you take home and spend on your, on your vacation or your car payment or whatever. So look, capital, when you're going to invest capital, you got to be a serious student. And a serious student of money, right? Well, I'll use money in that way, understands that capital, that what we want to do is we want to take capital and we want to look first at risk, right? If there's this saying, right? The more risk we take on, the more reward we get. Yep. But in dental, low risk, phenomenally low risk, yet extremely high return.
Yeah. I mean, I want you not seen anywhere.
That's right, because that's the whole thing about it is that you got to go back and look at this and go, my gosh, I mean, that's okay. So let's go back to Bitcoin for a minute, right?
Yeah.
So people bought in it. Okay, yeah, some people, I've got some clients who bought in when it was like $60. I get it, but the vast majority of people bought in, $3,000, $4,000, $5,000. Well, look, high risk, high return, right? And look, Bitcoin's probably going to go back down to 12 cents at some point, but maybe it goes to $1 million. Who knows? I mean, nobody knows. I mean, by the way, as soon as I said that, there was like 5 people who were listening to the podcast who were like, don't tell me it's not going to. I've been listening to Coinbase podcast or whatever. So look, it's high risk, high return, but dental has low risk, high return. And when you look at investment of capital, no shit that everybody's coming into this industry. They're coming into this industry because of the fact that it's taken this long is Goldman Sachs should have been here
20 years ago.
Yeah, I mean, this is insane.
When they were taking over the medical industry, they should have took over the dental industry.
And here's what ended up happening. Now, they're still taking over vets, which is kind of interesting because that margin is nowhere near the close. It's below that average, by the way. So risk rate's lower. It's low, but the return is, not great. But if you go look at a dental office now, here's the question. How do barriers of entry affect my margin? Which is even a better question. Because what's happening to the barriers of entry? By the way, first thing was happening was private equity was coming in and setting up management corporations, and they were finding ways around the state laws, the board's laws. And what ended up happening was what ended up happening is dentists started getting upset, and they would go to their boards and they would complain. And then what ended up happening was the boards would start all of a sudden fighting against these corporate people, and so did the dental schools. But guess what happens? Money talks, right? Yeah. Money talks. And before you know it, all the dental schools were flooded with all these corporate funds, and these giant Heartland Dentals and stuff started paying all the bills of these dental schools and started shoving money in there and doing all kinds of stuff. And then they started, and then you go to the legislatures and you start to go, okay, well, think about legislatures. By the way, they call these people lobbyists, and lobbyists get affect, legislatural decisions. I don't think that's a word. I don't know. Decisions. But what ends up happening is that the marketplace is changing. I mean, no matter how you look at it, I mean, I fought it myself. I mean, in ways I was trying to tell independent dentists, stop freaking selling off your practice. You got this return. You got this thing doing 30 to 50%. Why are you selling it off? But then yet nobody would listen to me. So then they started selling it off. So, okay, all right, well, I mean, if you listen to the very first Dental Wealth podcast versus today, a lot's happened. It's been a few years, and a lot's happened in the marketplace, and it's going to continue to happen. So just everybody hears me. By the way, corporate dental practices are not trying to get 30%. They know they can't get it, not with their model. So I want you to think about this, and this is for the intelligent audience. If the barriers of entry go down, what happens to profitability? Profitability goes down when barriers of entry go down. So your profitability is going to go down. I don't care who you are, listen to me, trust me. We're recording this. You can go back and look at it. Profitability in this industry will be squeezed. It happened in the medical industry too, by the way. I mean, it did. And so what ends up happening is you're going to start to see is this compression in the market by economic and market forces basically pushing down profitability, because ultimately speaking, it is going to be a competition. Now, yes, there are some corporate I just saw Aspen. I just partnered with a aesthetic studio, and I'm not going to say that you still won't have great profit margin. Please don't take that. You're going to still have great margin. Yeah. You're still going to beat the national average. But will you still get 30, 40, 50%? Well, I don't know. I mean, but I know this today, listening to this podcast. Invest, like I don't use this word, but I got to, like this is like the prior sailor. Invest in your fucking practice. Like look, I'm sorry.
I was just about that. Like, so how would you get ahead of this?
I would invest in every damn, like Bitcoin, Dogecoin, all this other stuff. Like, look, your profit margins are 30, 40, 50%. According to Harvard University, you are in the 99th percentile, but you're letting a bunch of private equity funds talk you out of the greatest asset you have. Yes, invest, double down, triple down. Yeah, if you're ever going to buy,
this
invest.
Is like having a stock that's at 1 cent, and you already know what the return's going to be on it.
Invest.
Like, I don't know if I should do it.
Tell the financial advisor to get the hell out of your office because he doesn't know what the hell he's doing. Tell your CPA to go back and do something else. And invest. Double down. If you don't want to, here I'm looking at camera. Call me up. I'll invest.
Yeah.
I'll buy.
We'll show you what the return is, and
so
then it'll make sense.
Look, I mean, and look, I'm being serious and I'm joking. Yeah. I'm obviously a little bit tongue in cheek, but I want you to hear me on this to say, like, this is like the wake up call. It's like some of you listening, like, you need to wake up. Mm-hmm. Stop doing what your friends are doing. Stop listening to everybody else. You talked about Dogecoin because what Matthew's talking about. So one of the guys in the office got all psyched up because Elon Musk is going on Saturday Night Live, so he's going to be a Dogecoin billionaire or whatever. And so the thing is that we look at predictability. 1% risk rate is predictability. Yeah. And we start looking at the industry, and I'm trying to tell you is like private equity's laughing all the way to the bank because they watch you guys sell your dental practices off for pennies on the dollar. And do you understand what the rate of return is on these dental practices? You guys were making phenomenal money, hand over fist, if you run this thing well. And so yes, invest. I don't know what the future looks like, but I know this. If you understand business strategy, by the way, this is not like, I'm talking about MBA, Harvard University, Michael Porter type stuff. I'm talking about like, this is like business strategy 101. When barriers of entry are reduced, profit margin will go down. That's what's going to happen. When substitutes, by the way, come in. So let me give you an idea what I mean by that. So another effect that happens on your profit margins is substitutes. Mm-hmm. So if a substitute, you start thinking about dental, is there was no substitute. And because there's no substitute, that also allows you to have profit margin. I'm not going to get in, this is not the whole business strategy podcast, or I would get into all the forces. But there are, there are forces that ultimately affect profitability. And so, for instance, I'm just giving another one of them. One of them is barriers to entry. I give you that one. 2 is substitutes. So if someone can substitute your product or service, then ultimately speaking, it drives down margin. So I'll give you an example for that. Is the
Smile Direct.
So Smile Direct, yeah, that was what I was going to use. Thank you, Matthew. So like you're an orthodontist, like so what affected margins in ortho? Like ortho is probably being attacked by substitutes. Well, Invisalign is a substitute, right?
Yeah.
So that's a substitute. When you start looking at the fact of saying, okay, well, what about Smile Direct, right? So Smile Direct, all the boards and dentists got upset about this, and then what they do, they started partnering with dentists. that's a substitute, right? And we start going, right. And then we started going, okay, well, what else is happening? It's happening in the implant world, right? Mm-hmm. And, there's huge margins, but those will get squeezed too. And I'm not trying to tell you, like, this isn't a call to say, like, freak out and go, like, worry. It's to help you educate by listening to this podcast that there are economic forces that affect profitability. Yeah. Okay. And economic forces, when they affect profitability, ultimately, if you look at the industry and the movements within the industry, even this podcast, I've been doing this podcast for probably 2 years. Yeah. And I will tell you that the changes in this industry over the last 2 years are absolutely dramatic. And because of that, you got to go back and look at this and say, okay, what do I need to do now? Yeah, and I'm going to tell you is to invest capital. That's what I would do. I would go understand my ROI. I would quit listening to my dental friends. I would quit listening to my financial advisor, and I would learn how to invest capital. Yeah. If there's 2 words I can teach you, it's invest capital. Mm-hmm. If you learn to invest capital, you have the ability. By the way, dentists have been getting rich for a long time. Yeah. But here's the thing, as wealthy as dentists have been able to get, it's not even close to the ability they could have had, because when they learn how to really truly invest capital, private equity is all about investment and capital. Don't you understand? That's why they're here. They're literally eating your lunch because
they wouldn't just come into an industry if they didn't see an advantage. Like, think of all the industries.
Right.
Where is corporate popping up? The dental industry is one of the top ones.
So my encouragement would be, if you don't know how to invest capital, learn how to invest at capital. Get excited about it. Yeah. Take something like this and go, like, don't get excited about, quit talking about Bitcoin and Dogecoin and the real estate market. You have literally the asset. You do not know what's going to happen in the marketplace. But today, leverage, buy, invest, learn how to manage capital. Look, you're listening to the Dental Wealth Podcast, and I'm telling you, according to Harvard, you have one of the top most profitable businesses in the United States and the world. So take advantage of the marketplace. Learn how to invest. Become more sophisticated. Become an investor of capital. One of the reasons why I tell people, if you're staying in the dental chair, it's costing you a lot of money, is because because you'll make a lot more money as an investor than you will as a dentist. And if you can learn how to invest capital, someone was saying the other day, the Bill Gates thing, where we were talking about Bill and Melinda Gates divorce and all this stuff, and someone said, it's not worth his time to pick up a $1 bill. Because he makes more on interest. That wouldn't make sense to pick up the $100 bill, excuse me. Yeah. And so it's the same thing. It's like, look, once you actually realize that what your return on is investment of capital, you'll realize you should get the heck out of the dental chair and start learning how to invest capital even more. Because as you get out of the dental chair and you learn how to invest the capital and you grow it and you consistently do that over a period of time, it would not make economic sense for you to be in the dental chair unless you absolutely love it. And because there's a barrier of entry and you own the barrier to entry, then I would take advantage of that, and I would dominate. Yeah. Dominate. I mean, it's like an ending message for the podcast.
Yeah, I mean, you have a playbook that has already been done in the dental world, where it's like, all right, if you invested in this is what return you should get. Like, it's all the statistics are there to do it. It just baffles me in the industry to see so many people not know, like, or just not do it and just keep refusing to invest in their dental practice when the statistics are there. It's been done time and time and time and time and time again. So you have a playbook, utilize it.
And then you go back and say, well, then now I've done this, I can impact my team and my family and my community. Yeah. And instead of someone else, why don't I take advantage? Imagine what I could do if I invested capital into a business that got this type of margin, what I could do for my team, what I could do for my legacy, what I could do for my family. Forget retirement. Retirement is, you blow by that. You'll have the time and the money to do what you want to do. So don't change your strategy. Stay focused. Invest in this business. Learn how to do it. Maximize it. Grow. Learn. And
Grow, learn, and invest.
I was looking for Reese, like I always have like a really good word to end on. For whatever reason, I dropped the ball on that one. That was like I just went like my mind just went.
That's fill in the blank. Fill in the blank. Comment on Facebook. Fill in the blank. There.
Fill in the blank. Whatever words you want to use to maximize the growth rate. Anyhow, guys, thank you for listening. Matthew, thank you for being here and making the podcast what it is.
Thank you, sir.
You guys have a good one. Those of you I might have offended by dropping my F-bomb, I apologize, but I'm a prior sailor. That's my excuse. That's what I got to use. But when you get passionate, use words of passion. So you guys have a good one, and we'll see you next time.